Let's see how to find winning stocks. So here we are at valueglance.com looking at the stock screener feature. Now if we want to customize, we can click on filters and we'll see a range of quality, value, and growth metrics that we can use to narrow down the universe of stocks. For example, one of the sample screeners that we talked about was ROIC and free cash flow yield. So remember, ROIC, this tells us about the quality of the business. How much value is it creating based on the amount of profits generated on top of that invested capital. Free cash flow yield, we talked about in a previous video. It's how much cash is coming out relative to the share price. So it's a valuation metric. We can come over here. We can drag the sliders to adjust based on our preferences, or you can put in the number that you're interested in. Let's take this a max. Let's go above 10%. And so we see this filter narrows it down here, 136 companies that we can say are high quality and at a reasonable valuation based on free cash flow. Now, let's say you were interested in a different metric. For example, instead of free cash flow yield, let's say you like the PE ratio or the earnings yield. So now we're comparing companies that have ROIC above 15% with an earnings yield, let's say below 5%. So remember, the PE ratio is the inverse of the earnings yield. So a 5% earnings yield means a 20x PE ratio. So let's look at companies in this case that are above 5% earnings yield, meaning PE ratio below 20. So now we can go through these companies here. See Google's on that list, Berkshire Hathaway, Johnson & Johnson, Chevron, Abbott. So we have different industries here, but based on these two simple metrics for quality and value, we can narrow down the universe of stocks to find high quality businesses at non-bubble prices. So go to ValueGlance, check out these different filters and use them to find winning stocks, analyze them, and compound for the long run.